Hey, everyone, welcome to June 12th, 2026 Principal Profit Trader Coaching Call. We're going to get right into it. Well, as we predicted that this was going to be a false breakout or a failed rally and the bear flag rising wedge double bigger picture pattern would hold. We shorted the top here, held runners down to the 60-61 level, and now we're trying to figure out what to do. Possibly reduce trade frequency right now because we could get a chop. It is expected that after moving this fast this soon that we're going to get some type of a bounce. We went into major support here. This was the recent low of the channel, which produced a strong buying tail. Now, keep in mind, we're also going down there, and we've tested it to the T, it seems. Let's just remove this so we can get a better picture. We went past it a little bit, right? But notice the CCI could not get down to that level, showing that the momentum on each of these moves is getting consecutively weaker, right? We call this a bullish divergence, which is why if you wanted to go long for a tradable reaction, you produced a nice move right here. See, this one is more immediate on the week per week, or if we're on the daily, the day-to-day basis. But the two above it, the RSI stochastics and the RSI divergence indicators, are also measuring underlying momentum, but with different vehicles and timeframes in mind. So these are more lagging. This is more immediate, if you will. So this, when we went up here, it was over bought, okay? And when the orange crosses above the blue, it confirms a downtrend. Anything above 80 is in the overbought region. So when we came up here, we were overbought. When you're overbought in the context of a bear market, it's a shorting opportunity, all right? So every rally, every bear rally, if you will, or bull rally, whatever you want to call it, every rally in a bear market is going to be a failed rally, right? Because that's the definition of a bear market. Otherwise, we wouldn't be in one. We have a two lower lows that confirms it. Not that we needed confirmation when we were up here with the triple top, multiple divergences, bearish divergences. You see, this is confirming this down move. That's why I'm suspicious that we're not going to get like a 30% move all the way up here. Because remember, right, when we made this 30% move, the bear flag had not been violated. It was intact, right? It was a double bottom. And we got a 30%. And now we just got that move erased. We're lower than the start of that move on this date. So a lot of people right now are not as psychologically confident. This is a bearish engulfing candlestick pattern. So it's possible when we come up here, we're going to get some kind of a dead cat bounce. That's what these indicators are confirming. Bear. Notice that when we came up here, we hit this multi-year trend line on the RSI divergence indicator, indicating that there was indeed a divergence, that we're still in a bear market. Then what we needed to do to confirm that was, once the weekly close, ideally two weekly closes, if you want double confirmation. When this crossed below 80, and then we got the cross here, right? This was not just going to go sideways. This was probably going to be a deeper move when we got this strong sell-off. Now the question is this 200 going to be the final low of this bull market? Well, if you measure the distance from this high down to 67, let's say we dropped about 50%. Well, when we came from here at 69, let's say it's 70, and we went down to 23, that's a lot more than 50%. So the principle of exhaustion was invoked in each bear, so which leads to a greater odds of a bounce, right? So if we even go back in time more, when we went from 19, let's just call it 20, down to here, when it did hold as the final low of support, that was like going from 20 to 3. That's like a huge drop, way more than 75, let alone 50. So each one, I'm going back in time, you're seeing a greater drop, which increases the odds for the principle of exhaustion to be invoked, which then increases the odds for a bullish reversal. That's why I'm not convinced that. You see how this one took more time and we went significantly lower? Let's just say we went from 22 down to 15. Even if we went around, you call it 25 down to 15. It's and the time factor. So I'm not, so That's the issue here is that we've gone only from one, we've gone 50%. This one we've gone more and even more. So if this one had a greater drop, but it still went sideways, this one had the greatest drop it held. Shouldn't we get a bigger move on this one if that idea or pattern plays out in the future? Now it's just one idea, but we're just looking at different ideas here on larger time frames. That's more of how I'm going to reload a portfolio and how it might influence certain key areas for income producing trades. Right now, it's a very tricky context where I kind of wish I just sidelined right now because we have potentially here dropped too fast too soon. We're on the short term, we're making this balanced breakout pattern attempt where via dog leash, maybe we'll come back here and revert and test this moving average here. Now, keep in mind this 20 moving average is more important on the weekly than on the 20. You notice on the weekly, actually, if I clone this, I always make the 20 yellow. It's a 50. Why didn't that work? Huh. Unless this is close enough. Oh, okay. So I made the orange the 20 on this one. Oops. Let me just reverse this to a yellow. Actually, let's get rid of the orange. All right. Then we have a yellow. So this is pretty much held for the bear. And we broke down, we need to cross above that really to have a bigger rally, in other words. So, but on the daily, we can kind of go way above it, trade around it. So yeah, I mean, there's a possibility that we could get a bounce breakout, and I would have, there was a Vegas for a reload at this double bottom. It's very tricky to do this because I saw the beauty principle of reloading, and here this was intact. But for a day trade, yes. For a portfolio where there's potentially larger costs to get in due to the larger position size, and maybe someone's doing it on a cold wallet, then you have to wonder, well, how much would I rather be in a position to wait and short this for another leg down? In other words, because the bear market's not over based on the 4-year cycle and how it's behaving based on our PPT Bitcoin time cycle. And if this is going to be a balanced breakout, I would really like it to be a lot more than 54%. If I was long, I just imagine like, how do I feel if I was long? It's part of our system. I would like this to be at 124% at 1213, like way above average, not mediocre, potentially even below average. I don't like this inverse zero line reject, right? Which if you're in a Vegas trade, you should have been taking half to 70. I mean, you're taking profits on these exits, which are, entries or exits and the vice versa. But keep in mind, right, there is a bounce potential just based on very strong horizontal resistance. This is still, this wide buying tail here, right? We talk about a buying tail. This is a very strong move. Big zones create big moves, but the way we got there this time is very bearish. We're in a bearish downtrend on this intermediate time frame with significant down movement in a bear market, which, it's not just, I know I gave a multiple time frame analysis today on the channel, but one of the things I got to think about is it's not just the length of time spent in a various time frame that would be a fractal of something. It's also the magnitude of the move. So, when we went down here, the magnitude of the move was sort of still sideways, right? This is clearly breaking things. It's very downtrendy. So don't get just so caught up on this thinking that now this is the low and we're going to go all the way up here. I would be very cautious even right now at this high and this high on a balance, potentially not even being able to break it today on a potentially give back Friday because of this inverse zero line reject. And we're in a bear market and it's only 55% relative volume. If you look at the smaller time, I mean, I'm flat out, I'm biased. It's a zone I've shorted before. So I'm personally biased right now. I have size on, you know what I mean? So possibly my ability to think in a flow state has been affected. But the only thing that I can control right now is the fact that I have a stop loss that if this becomes a bounce breakout, I'm not going to take an excessive loss in my account. Yeah, it will suck. I do not like to lose. Nobody does, and it's a possibility that we are, just short term overdone and we could break out. It's certainly a possibility. I really don't know the future here. I'm just imagining that if I did want to produce a balanced breakout pattern, which we very well could, I wouldn't want to show you what I did in the previous time frames, and I wouldn't want to see this bearish divergence on the 4-hour and the hourly that we've kind of, when we were here, we tried to make this breakout out of this balance, right? And we had a strong move up. Now we've been trickling up, and now we're making another attempt out, and we can't even get that same momentum. Now, granted, one of the precursors to a trend is a mature balance. If we count how many days this is a mature balance. So I'm not saying there's not some factors where if you're long right now, you're going to get a great win, and I'm going to get stopped out. I may not be in the best frame of mind because I'm taking trades where the probabilities are more balanced, which I should probably skip because when I list out daily call things in the channel and you see some bears, some bulls, then you don't have to take something that might be 50-50 because it's only 50-50. Take something that had really higher odds and a higher risk reward ratio, because when you combine something that has higher odds versus accuracy, and then higher odds equals accuracy, and plus a higher risk reward ratio, I can get more out of this. Then, for example, when I gave the signal to short on this double top here, where this 200 moving average hadn't been touched in multiple years, super bearish beauty principle, it marked a giant move crash down. I showed you on the time frame of the weekly where the last time it touched on the weekly was like produced a giant bear leg down in the last cycle 4 years ago. So this was really strong, and there was a price pattern that this was exhausted, and there was a bear flag. So there was a lot of things here where you could say, hey, well, then it would go to the lows here. You could have held, to this, at least to this flag here, if you wanted to. Every opportunity that was pulling back was a reload into this. But now we're into this until this breaks, which will produce the next leg down. Not everything, history repeats, but it doesn't rhyme. I mean, last time we had a wide double bottom and it produced a hammer candle. And then the next day we broke it. And then, we went to a new value area. And then we came back up and test roughly the bounce breakout area in conjunction with the 200, which produced another large move down. Going from here to here is potentially smaller than going from here to here. So it's maybe more short-term exhausted. This is also wider at that time. If we go on the weekly right now, there is, for the bulls, we're at this price level where we've made multiple bullish divergences. Okay, despite these slower indicators confirming this downtrend. So, like I said, there's a lot of things on different time frames where it's like, it's not really, we're either going to get a bigger bounce or not. But I mean, this is not something I'd want to see if I was in a bounce breakout trade right now without taking some profits. And I guess as this came up, there was a chance I could have got out around here. This could just come up here and just blast out here. Once this happens, then you have a multiple week bounce breakout pattern, right? Because there's not really a bear flag here where you could get a high odds of a false breakout here, because it's so level but the thing that you want when this happens is you need momentum for trends. So there's not that. So like I said, there's a lot of things, and it's 12/19, and we had a trend day yesterday where we made a high here, then we made another high here. So just it's lower odds, just in pure consecutive energy, to have two pure trend days in a row. So when you made a pure trend day from one end of the balance to the other, where you had the high on this day, the high on that day, and these key swing highs with the recent down move, there are some, that is a notable resistance zone where if my thesis is correct, it'll just continue balancing, which worked here. Because at this moment in time, the balance wasn't as mature, and we made, straight line moves into it, right? Here, made a bounce, broke up into it, rested, came back up, rested, and then tried again. Because this is resting now above what this key reference area is, which, by the way, is a high volume node. I'll just draw that just so you have a frame of reference. Obviously, this zone is based on the key reference areas of these range extreme highs. This key reference area is based on this range extreme low. And if I go back in time, there's other structure, no doubt. If I can zoom out, I'll show you. All right, we're hitting key swing lows here, where the bounce could potentially ensue, but also as we're coming up into this, if you look on the daily, these areas are broken resistance as acting as support. To me, really, it's trying to make a multiple breakouts. This is a bounce breakout into here, which then would try to produce sort of a bigger bounce into here, but it's coming into this really strong down leg here. And in conjunction with the fact that, typically we should have, based on our Bitcoin time cycle, at least 4 more months or so of a bear market. One thing about high volume nodes is that the trends start out of them, the greater the maturity, and then the volatility contract. This had maturity of balance and a volatility contraction, and maybe market moving news, and then we get a trend out of it, right? And then you have to gauge, you know, whether this trend was then going to be more dominant than this trend. This trend is bigger, so bet on the bigger pattern, right? We're coming up into a bear market now, so time frame this bullish time frame then meets this bearish time frame, which when zoomed out has this bearish time frame. So then you have two time frames against one time frame. The other time frame eventually becomes neutral because you're uncertain. You start topping, you start shorting. There's a 200 there, confirming it. Everyone's talking about that. Boom, we get that huge move down. Now this is where it gets trickier because it's like shorting here is like near a balance area where it could stop you out. You're trying to do this pullback continuation out. The safer move is that only start shorting here once we get a confirmed breakdown. But we didn't get that yet. Or I get something really deeper pullback up into here and it starts topping and we get multiple divergences. As it stands, if you're not short or long right now, just stay out of the market. I don't want anyone to shadow me right now. Like I said, when you are dealing with some of the things I'm dealing with, maybe you're not. Maybe you're willing to take more risks when things are balanced. Because like I said, this zone here, even though it looks like it's the same as this one, this is major support. I used to color code these to remind me, because if you go out on the daily, this is off major support. Little bullish candlestick pattern here. So why isn't it probable we can get at least a little bit of a bounce breakout today? That's the daily context, right? Maybe I'm doing this wrong here from a top down, but then I'm asking myself, why is there an inverse zero line reject here today? Why is there why is there a divergence on the hourly as we're trying to break out? Why is it 1223? We've just been going sideways for a long time here. We're topping, you know, I'm looking at this and I'm looking at this support zone, but then I'm also looking at this magnitude of this intermediate time frame bias. Like the short term is neutral right now. The intermediate is down, but it's so down where it's almost like magnified in a sense because we went so we just have to be careful here that I mean, even if we take a modest just idea here simplistically and just go from here to here. I mean, why aren't we looking up here, bounce, we get down here to 46, then we start bouncing again, and we start ranging within this range here. I mean, my prediction is 25K. I know that sounds crazy, but that would be down right around here. That is a little. It just doesn't sound right, but I'm basing it on what it's done in the past, like just using the same percentages. That's what I mean. It even gets lower than that if you want to do that. Then we could draw these channels, and then we could you could use Elliott wave, ABCD. We could try this. This is making its first leg down here. Might get a micro bounce here that shouldn't show up. Then we get the bigger rally here. It could either come up into this bounce area near this trend line type of a thing here, start topping. Then we get this bigger move down here. Probably should fix my trend line here. Hang on a second. Oh man, whoa. You don't want to make it down to minus 4,000 on these guys? Come on now. What are you doing over here? If we just do it based on what the percentages are, we get, even the higher range of that would be 37 to 25 kind of a thing. Let's do like here. Then, it starts ranging. Yeah, anywhere this would be like, oh my God, reload anywhere in here. If you reloaded in here, you're a hero. I mean, even here long enough, if you can wait through for it, I'm not saying to do it here, guys. I'm just based on what Bitcoin's done. If you really want to follow a correct process and you want to forget what everyone's saying and you just want to follow what the odds are, it would be very risky right now to put on huge positions and think that this is below when there's possibilities of an ABC three-wave down at correction here. Like I said, this could be a micro one here. We could honor that. Look at this. And I may be fading against it stupidly. I apologize if someone's shadowing me and we get a breakout. Maybe I'm putting a little bit too of a blue car syndrome confirmation bias on this inverse zero line reject. And on the hourly, divergence on the hourly. It's kind of wide, and this is obviously on the daily, so I do have that stacked. It's just, to me, it's like if I want trend to get a balanced breakout pattern, I don't want those. So, but in big picture, right? This is what we're really focused on is the big picture here. Because could be a box around there. Ooh. 1, 2, 3. I'm trying to look at how we do multiple time frames for support and resistance and patterns. We need to do multiple time frames for leg counts, right? We gotta up our game here because we're competing against the most sophisticated time in trading history. I mean, 80s traders and 70s traders had to call people. They were looking at charts constantly. Every little kid who thinks he's a savant has one on his phone. Then you also have institutionals that are constantly automating and following more traditional rules. With like this Fed also overprinting things that could potentially make things super inflated on certain time frames and in certain asset classes like the stock market. 1, 2, 3, and then we'll get the fourth to match the Elliott wave ABC. Okay. So I'm just imagining different scenarios. I mean, that's how I was able to call this, call that. We're in this descending wedge channel on this larger daily time frame. You could also see it on. Um, okay, I'll use this for Coinbase. I will save this. But just to have been shorting here on the way down, the switch to bias, the body may not, since we're looking at multiple time frames, be able to shift like that. As just know, imagine being okay with getting better at this. There was a time not too long ago, at least in my mind, not too long ago. I've been doing this for 10 years. That shorting used to be really difficult for me, but as you can see, that's really what I'm mostly comfortable with doing now because we're in a bear market. Longs have been harder for me, as you can see. This was a double bottom here at around 9 a.m. that was on top of the high volume node that I thought maybe about taking, and that would have been a nice trade because I could have financed into there. Then the short into here, as we're maybe just producing a neutral day, which is a range that breaks to both sides of an established trading range, but then ultimately no one really wins for the day, rather than a day here where we were in a 2 day range, and then we had a trend up, trend up. That day type is an up day or a trend up day or a pure trend day rather than a double distribution trend day. But then if then you add the category of narrow ranges, and the next day, it's less likely to have another one of those. Just on a pure principle alone. And the fact that, as this was coming up here, is this a balanced breakout setup that you could then go long? Well, no, because you never can take an IBB setup under resistance. You could have faded this because you're more sideways today. That would have been fine. We had a really good high volume node. You had this holding, and we came back down. And as this was making this dynamic double bottom, this was mirroring it. So it was kind of it wasn't giving you any bad information against it or any helpful information for it. Now, like I said, I'm against a lot of things on this short up here on the daily call, if you want to talk about it. But this is, as we're coming up into here and having this selling tail here, we did try to break out of this here. We had a strong move up here. And now on the second breakout attempt here, there's been multiple, but the real big one here that matched it, we made a higher high, right? The momentum indicator couldn't. So we have a bearish divergence there. But that doesn't trump these higher time frame things that I have talked about, which is, we're potentially overdone. There's major support here. We've had a bullish Vegas here that kind of got us in here. Beauty principle here. There's a bullish Vegas here. But this, like I said, this bullish Vegas is occurring when the trend line was still, oops, what did I do? When the trend line was still intact. Now we do have a confirmed leg out of a bear flag in a bear market where, like I said, if you just clone the last previous leg down, even though we went down, but it seems much faster, we haven't really gone down as far. And we can zoom out here on the daily. You could just see this is a shoulder, this is a head, maybe this is another shoulder, and we're potentially going to go down more. Difficult to predict these things, but if we use what previous market behavior is done, we don't want to, get too excited because, like I said, these bull rallies in bear markets feel bullish, but then they're eventually, when they start to get exhausted, like this one did, this was one of the greatest shorting opportunities that I ever posted live. And if you held down here, you went from around 83 down to, you're talking 28, 30% moves that we're catching that you could have caught. We quad exited. Obviously, we didn't get that, but just the idea that we could get better and think about that, because that was one of my thoughts. I'm like, why don't I just hold this all the way down there? So, as I'm getting better with exits, everyone, might benefit from that as I get better targets. Entry here was really rock solid. And of course, I've been keeping people out of, buying back into bull markets or reloading here. Now, there's a little bit of fear like, oh my God, what if there's this huge move and then all the portfolio guys are hating on me? Yeah, it could be. It does suck that I guess it does. What did I want to say? It's difficult. It's difficult to, time these things and know when the bigger rally might occur. Just keep in mind we're still in a bear market, right? That's just keep reminding yourself that there's phases to things, and that even if you missed some type of a bull move, we're in a bear market where there's going to be a shorting opportunity. This seemed like the biggest and slowest stacking staircase uptrend, and oh my God, how did you miss this? You missed it. You're done. This is this is when a lot of people got out. Then it's going to come. That would break. That would break my opinion at that point because it's the previous swing high. But look what happened: the descending wedge, the bear flag, everything that we talked about happened because we're stacking bigger picture pattern odds. We have a price pattern here. We have a bigger picture pattern here. We have a bear market phase here. And we have a similar leg down here where this could just be like a pop that goes up to here, maybe up to 66, and then we get another leg down. If it fails here, this would be very bearish. I was at least expecting maybe a balanced breakout today. That's why I'm a little surprised that I shorted against this. I guess this is this picture perfect, or as they say, well-baked inverse zero line reject here that's not making me really feel confident. Like if I was long right now, I would be exiting some, take half off. I would be nervous now because this inverse zero line reject is not making me confident. Now somebody could just put an order in and all of a sudden it breaks out and I'm like, oh my God, the system's, it'll make you feel stupid in the moment. But remember, we're not worried about each individual trade. Even the income producing account has to have a long-term mindset. You're 5 or 6 trades in a winning streak away from, making something back or whatever. So that's how you have to think. Highlight real style. This was a short that I gave and got out perfectly here. When I gave this short, I looked at it and I was like, I should go half out here. I just wasn't as confident because we were around a high volume node. And then when I came back out, I got stopped out. Now I have an NLP that says, you know, um, there's also a reason because like this was a trend day when I shorted it. We made higher highs, and we it was almost like a pullback. So there was an intraday bias and a sustained momentum against anything that was counter trend that day. This day doesn't have, because the day started here, a sustained momentum edge either way. Now, as I'm shorting up here, yeah, the bulls are in control. The intraday bias, as you bought here or here, you would argue that the bears were in control. Now, the intraday bias is just who's in control. Anytime we use a fade setup, we're going to be going against an intraday bias. But obviously, you want to pay attention to like when the intraday bias and the sustained momentum are against you. You better have a really good reason why you're fading counter trend. That was not the best as a move here. But as we come up here, there's better resistance. There's a bearish divergence, and the day itself is not trending so far. Like I said, the daily had the major support. There's a dog leash possible retest that wants to go a little higher. This is bearish. So as I'm listing these things, if you can imagine a probability calculation scale, instead of listing it sequentially before 8 o'clock every day, which you can do, you should do, you with the sheet I gave you, you also need to take snapshots in time. Like I'm doing a daily call right now live at 12:37 p.m. And that's okay because you can use that. You can use the scale that you're visualizing to decide, like, okay, well, what do I want to do? How many things are against me? How many things are for it? Um, if something like I said, there's like some 50-50 things because I know I may be saying a few more bearish things, but in terms of what that major support represents, when a major support category gets into your support and resistance on your daily call, that gets a magnification of times 2 in a weight. So you could put 2 check marks there, so to speak. So what I'm trying to say is that it's more 50-50. So this could be, like I said, a 50-50 thing it's sufficient because, if you have a good risk reward ratio, you still could have an edge if you flip a coin that way, but it's not a necessary condition to take a trade. To have like a necessary condition, you have to have a 3 or 4 quality trade. You should have a lot more things tilted one way or the other. Trying to think, what are the things that I could like, let's say this relative volume was at 30% instead of 90. That would be so below average. I mean, it's still not great, but 90 is not terrible right now at 12:38. So, and what else? Yeah, I talked about the length of time, the trend, so there's some of the things I talked about, but these pre-market factors for a trend, you have to add that category into what you do on your system or daily call because some of those things are like, are we around a VPOC? Or is there, I list them out. Are we oscillating around a VPOC? Is there maturity of balance? Is there volatility contraction? Some of that may overlap. Like a volatility contraction may be something that will be inside a candlestick pattern idea, but so what? It's still something you need to have. Because as you can see, sometimes prior momentum and candlestick pattern overlap, but not always. You know what I mean? This takes a while to see the nuances of these things happen. It takes a while to see the patterns form and have this idea that they morph, and then it takes a while then to be able to be comfortable to bet real size on it in real time because like the psychology of doing it is that I usually don't even like to teach like right now. Luckily, there's no one on the call when I'm in an actual large position that I'm trading because my nervous system's pretty fired up. So, this is not a psychological. Only thing I can focus on right now is the only thing that I can control, which is that I have a stop loss in within a fixed percent risk model that we have. That's it. That's the only thing that I can control. I mean, it's so two-sided. It's almost got to really set it and forget it because I mean, just think about it, right? Let's say you shorted up at this zone, you had this. I did have a resting order up there, but I jumped in early, unfortunately. I would have been perfect right now to even have a chance to get out. But the idea is that then this look, oh my God, we have a selling tail. This thing looks like it's going to go down. We're on an hourly. This is not like it's on a minute chart or anything. And then, bam, it's just starting to go sideways. Now maybe it breaks out, maybe it doesn't. It's when you look, if you're constantly looking at these lower time frame ideas with this back and forth energy, it can drive you nuts. So what you have to do, like I said, that's why we did talk about how important it is to do your pre-market analysis on these higher time frames top down and be thinking about what the probabilities are ahead of the market open. So especially when you're just starting out, you don't get lured in to lower time frame price action, which a lot of times is just market noise. Let's just say you were really bullish about having a bounce breakout, and then you decided to buy when this looked really green up here because it started to break out, and you wanted to put a stop here, and then it reversed on you. It's like, oh my god, it's like, well, was there high odds to buy at the high of day when really the resistance zone has to break that to have this short squeeze idea? And you certainly would like this would have a greater edge if, let's just say, it was 91% and it wasn't 12:42, but it was like 8 o'clock in the morning, like an hour and a half before the market opens. And we were up there. I'm like, wow, like someone's going to gain control of the day and someone is going, or at least the RTH session, and that could be a bounce breakout. But at the same time, this is one of those days where really no one's really been in control of the day. If we go on a lower time frame, well, you could argue here, like this was a good long because it happened right at 9:30. There is this day trading edge at 9:30 in the morning because there's going to be some type of who's going to be at least going to be in control of this RTH session. So you could have said, okay, here is the double bottom, go long. Like I said, I have a physical problem with going long. I'm just working on it. That could have been a good trade. Obviously, shorting, I don't, which maybe I should right now, like I said, because it could be short term overdone in a slightly higher bounce. But the reason why I did go short at this micro bulls bear zone against a major support zone, like the support has a higher weight than the resistance right now. But from a trade location perspective, because we were at the resistance and we were topping, what I mean? That's why I took it. And that's also why, and also with it definitely needed some underlying and daily bearish divergences and bearish setups with that inverse zero line reject momentum to add a confluence edge to the setup because it's so ambiguous right now. It's not, when does it get super obvious where you ignore all that? Like, when you're breaking a giant pattern, right? Then you're like, oh my, it just starts to take off. That's when you really have an edge. Or you're so short term exhausted in a trend in a bigger picture bear market that then when this starts topping here at a 200 that hadn't been, you could think, wow, if this does hold, it has a huge move down out of this. Now, keep in mind, like I said, when this broke this bear flag, this readily broke after one day. This has been a battle here, namely because we dropped down really quickly into it. It's different. This is just larger, so just different context, bigger move off of that. Kind of repeating some of these things, but hopefully the way that I'm, like I said, inverse zero line reject here, the way that I'm talking about these things can help through repetition make you see the market through this lens because I think they're helpful. And other factors like you'd be looking at other markets. There's nothing really overwhelmingly one way or the other. I mean, Ethereum's kind of two-sided as well today. It doesn't get any more live teaching than this, right? Oscillating right in a high volume node could produce a move. Recently there was a down move out of it. Kind of at this micro inflection point, so to speak. So we'll see what happens. Like I said, there's some, like I said, short-term reversion to the mean dog leash up, but then a potential continuation because this momentum is not in alignment with this bear market, and we're potentially could be in a situation where we're in a 1, 2, 3, 4 wave down in the context of a larger ABC3 pattern correction in this, like I said, on that weekly or was it daily, larger time frame? Either way, it was zoomed out trend lined channel that we're in currently representing visually the bear market. Market moves in a series of thrusts and corrections as we're learning and getting better. I think you're reading part of this journey as we're going along here. And it will be fun when we get the ultimate bullish reload signals and then we start to flip into a bull market again, because that's when the larger time frame bias shifts bullish, and there'll be way more bulls. There'll be all bull trades, and we'll be all in a better energy, because really there's two things we can do right now: sidelining for portfolio holders to avoid the damage, and some of us have been shorting on income producing and day swing trading to capture this move down. Be a little caution in this sideways move. You can whipsaw it out like I have in a couple of trades. Just be a little cautious right now. It may take me a little while to get my rhythm back due to some personal things that I've been dealing with over here. So as we're moving forward, it's important to stay level-headed. Remember, every rally in a bear market is a shorting opportunity potentially, and we can look for those signs with this system, because this is a good holistic system that combines principles with good indicators, with good market contextual analysis that may seem discretionary at first, but because we've mind mapped it into our system cheat sheet, if you're willing to really learn each category and really fill it out like I have back in the day for years, then you can see these snapshots in time like I have as well. But just looking around the market really quickly. Some alts, some little bit of buying in alts, nothing crazy. Geopolitically, more wars starting in Iran. As we were talking about, it was likely that the Iranians were going to continue some delay tactics and not agree, and then that the Trump regime would continue attacking. Not good for geopolitical markets. So we'll see if this instability can transfer over. So we're being cautious and sidelining and doing the best to be in the flow of Bitcoin as best we can, and honor the mistakes that we make, and also look at all the wins, and also not try to project what we want onto the market, but let the market project what the opportunities are to us. So thanks for coming out on this June 12th day, which was just me, but I know people will listen. I appreciate those that do listen, and I'll see you guys in the room. Take care.